Welcome to the webinar delivered by Cox & Co Payroll Solutions, calculating holiday entitlement and pay. This webinar is a bite-sized version of the original that was delivered on the 10th of November 2020, and we will be covering zero-hour contracts, entitlement and pay for your staff.
And then we move on to ad hoc Andrea, and this is where guidelines and legislation start to fray at the edges. And if you tap ad hoc Andrea into a calculator, HMRC calculator, and ask it to tell you how many hours entitlement she is entitled to, it will say something along the lines of, I don't think the calculator says this, but this is in the guidelines, but it certainly won't give you a figure. There are no regulations on how to convert the entitlement into days or hours for workers with irregular hours. So it's difficult, isn't it? Someone has just joined you, they're going to work irregular hours. You don't know how many irregular hours they're going to work. You can't even guess, especially in the current climate, when you don't know what you're going to do from one day to the next, potentially. Things are constantly changing. And this is where we start to fall back on the old ways of doing it to an extent. I think where we've kind of refined it a little bit in very many cases, we would have we very often calculated holiday pots as a monetary value. So we might accrue 12.07 or 12.07 pence for every pound of monetary earnings that employee was going to get, and that wouldn't have been far out. You can kind of you can make an argument for it in any case, or you could. Now you're really limited with that, because the legislation is all about how to apply, how much money they get. So you couldn't, if they had an increase in their rate of pay, their weekly rate, if you were accruing it as a monetary value, then that wouldn't be reflected in your pot, so to speak. So I think the middle ground now is really, you have to, one way or another. No one will give you any guidance as to what 5.6 weeks looks like for Andrea. No one knows. The guidelines don't cover it. There's no real answer. So you are in the realms of fairness and consistency, best practice, making sure that those basics of the employee getting equivalent pay when they're off work as if they would get when they were in work. You have to bring those into play. And I would still be very tempted to use 12.07% as a good start point. If they've worked 118 hours, and their pay rate didn't change, then 12.07%, 14.24 hours accrued does equate to 5.6 weeks. But you can also make arguments for 12-week average. Everyone used 12-week average historically. You use it in reference to other calculations. So you could continue to use that. Should you be using a 52-week average, because now the legislation is looking at 52 weeks over 104-week maximum. So should you be carrying it backwards further? I'm still of the opinion that a pot based on 12.07% is not going to be far away from compliance, and it's very difficult to see any other way of doing it, because you have to have a start point. You can apply the legislation and you can apply it to both entitlement and to pay, but it doesn't work out in the way it should, because you don't have a start point. You don't know where the 5.6 weeks begins and ends. An employee could just continue to take weeks and weeks and weeks based on a calculation at that point in time. You have to have a maximum. You have to have a start point, and that's to my mind where the legislation has fallen short. But it doesn't seek to legislate for the entitlement side of it. In no shape or form anywhere does it seek to, to bring the entitlement. What it's doing is saying what you must get paid for your 5.6 weeks of statutory entitlement. It makes no reference to where you're going to get that from. Okay, all right, yeah, so just a brief summary slide, really, this one, to give an indication of what we're going to use for measuring a worker's weekly pay for calculating holiday. Fixed hours and fixed pay, very straightforward. A week's pay is a week's pay. Split a year by 52 and you've got a week's pay. And there's no need to do anything in terms of legislation if it's just a fixed salary. You can ignore all this, really, unless you pay overtime, of course. Shift work with fixed hours. So we're making the distinction between shift work with fixed hours and no fixed hours. The way holiday pay is calculated is different according to which type of worker you are. So we might ask you what type of worker an employee is, potentially, and you might need to know. I mean, people do talk interchangeably about 0 hours workers and freelance and casual and weekly paid and all these different terminologies, and it is reasonably important to understand which is which. I mean, if you're weekly paid worker and your hours are predominantly fixed, maybe 40 or 35 or 37 and a half, then it's calculated differently. So if you're genuinely 0 hours up and down like a yo-yo with no fixed pattern. In both cases, we're going to be referencing a worker's average weekly pay from the last 52 weeks. And we're going to be counting weeks in which they were paid for work carried out. So that's an important thing to note. We are going to exclude weeks in which they didn't carry out any work. They were on holiday and therefore didn't carry out any work. They were off sick, unpaid leave. If they had weeks where that was all that happened in that week, so they had no work that they were paid for in that week, then we would exclude it from any calculations. If they did a bit of a week, so they came in Tuesday morning, maybe do a couple of hours, then that week would be included. And you can see that, as with any average, that will have an impact on a rate of pay. If you've got a lot of weeks where they only did a relatively small amount of work, then it will drag the average down. And similarly, if they got weeks where they did an awful lot of hours, then it will push the average up. But obviously a 52-week average, over that period of time, then it should be a reasonable average. But if you've got someone who's just started and hasn't got 52 weeks, then you do need to bear in mind. I'll show you an example or two which just shows the impact that that the work pattern can have on the rate of holiday pay. So we're excluding paid holiday from any average. So if they got paid holiday, we wouldn't include it in the calculations, which makes sense to me. It's an average of an average, and it doesn't seem to make sense to include it, which is why I then am quite surprised that it is included in 0 hours contracts. So if you're a truly 0 hours or no fixed hours worker, then you would include holiday pay in those averages. So there's a distinct difference in the way you calculate it. And so what you apply for one worker is different to what you might apply for another worker, which is why you have to be quite clear about the categorization of workers when you're calculating holiday pay. So the differences are there. Holiday pay, what is included? And as we said, slide 1, we're looking to replicate what an employee would have got had they been there. So if they earned it while they're there, then it should be taken into account when they're not, when they're on paid leave. So over time, I've listed the pay elements that are included, and then the caveat at the bottom, which is interesting and leads to a lot of debate in courts of law usually. But basic hours, basic salary, basic pay, I mean, they would have been included ever since I've been running payroll, I suspect, although possibly not. I can't remember that far back, to be fair. But in any event, their basic pay elements, you would expect an employee to get their basic pay when they went on holiday. I don't think there's too much doubt about that. Overtime pay, including compulsory, voluntary, guaranteed and non-guaranteed overtime. So you know, at various points in time over the last 5 to 10 years, we've seen scenarios where people are identifying voluntary and compulsory and guaranteed and non-guaranteed overtime and using it or not using it in their calculations. Now we kind of, what you call it is no longer really very important. It's all down to the bottom sentence. Commission, performance related bonuses, sales premiums, call outs, on calls, overnight allowances, emergency premiums, piecework premiums, you name it, it would normally and ordinarily be included in the calculations. We as a default would include it, I think it's fair to say. And probably employers that you know, employers have been including it in a lot of cases for many years. I think it gets tricky with things like bonuses and commission. You know, is it a truly discretionary? You know, people have had a hard time for the last 12 months. I want to give them a bonus, and it's not something you can attribute to a time period, and therefore it's very difficult to, you know, to apply to the calculations. But if it's you know, a bonus that's earned in you know, sales related bonus or whatever, then you'd expect to earn it if you weren't there or if you were there. But everything is based on that bottom sentence, and it's based on the assumption that employees are paid regularly or repeatedly over a sufficient period to count as normally received. And there we have it, yet another grayish, it's actually yellow in this case, but I consider it a gray area. What is regular? What is sufficient? Is it repeatedly? You know, yeah, you pay your money, you take your choice. And I think certainly recent court cases have certainly tested some of the limits of these terms. And I think in common with most things, they, you know, what was probably deemed irregular 5 years ago is probably now regular. And I think it's partly driven by the fact that, you know, we've certainly seen employers try to call things something different, you know, to allow them to kind of exclude it from holiday calculations. I think over time, you know, it just becomes aligned, and you know, if you pay tax on it, if you pay national insurance on it, you're probably going to accrue holiday pay on it. And that's certainly, you know, in most cases the way it would go. I think, you know, where you probably got a, you know, a reason to look harder is with sizable bonuses that, you know, are you know, perhaps related to things that go on while you're in work rather than, anyway. That's what's included, pretty much everything, and that's the way we would base our calculations. I had a conversation the other day with someone who, you know, we talked about service charges on restaurant, you know, meals. You know, it's being paid to the employees through PAYE. You would have a problem excluding it, I think, and certainly the opinion is that it should be included, but there's a, you know, school of thought that perhaps it shouldn't. We wouldn't make that judgment. We would say, you know, I think much in the way that overtime has just aligned and just become a lump of money. I think these things do. It's definitely what history suggests will happen. And it's a bit like, you know, we've all kind of, probably, or a lot of people have gone through that process in relation to furlough and CJRS claims. You know, it's those discretionary, non-discretionary kind of judgment calls that you're making when you're calculating you know, what's reclaimable. You're making the same kind of judgment calls. You're referring to the contract of employment and seeing how explicit it really is. But yeah, it's certainly something that you need to bear in mind, because what it all means is holiday can be a damn sight more expensive now than it would have been in the past. You know, it's already, you know, you've got, when I started, you know, certainly it was 4 weeks holiday, might even have been 18 days, I don't know. But anyway, whatever it was significantly less than 28 days, and it was based on significantly less earnings, and it was with a significantly less national insurance employers' costs. So it was a lot less expensive. Is the basic premise. The whole calculating holiday pay is based on, as I say, it's a weekly framework now, so you can forget your months. If you're paying people in months, you have to drill down and look at what that month really is. It's a series of weeks, and the way those weeks are, you know, from a holiday perspective, a week starts, certainly for a monthly worker, it starts on a Sunday, ends on a Saturday. If you're a weekly paid worker, you can tweak that to your pattern. You know, if your working week is Monday to Sunday, you can use it. If you're a monthly worker, you don't have that opportunity. It is what it is, much like SSP. So, you know, you're having to look at the behavior of workers who are notionally being paid monthly and some overtime. Where was that overtime earned? Was it in week 1? Was it in week 3? You know, was it in a previous month? Because you've got a cut off. So life gets a whole lot more complicated if you take it to the nth degree. Whether you do that is, yeah, I mean, the legislation is there. Whether you end up significantly different to the answer you would come up with when you do it the way you do it is another story. But everything's based on 52 weeks. And it's based on the last 52 weeks prior to the holiday being taken, weeks in which paid work has been carried out. So it's not necessarily 52 weeks. You know, I mean, just again, referring to furlough, those who haven't furloughed any workers and haven't done the calculations won't have the benefit of knowing these things. But, you know, furlough, you were basing it on an average for perhaps 11 months or 12 months, depending where your pay periods fit, as your average pay for the previous year, one of the reference points. Holiday pay isn't that simple, because you can't just take a P60 value or a 52-week value and divide it by 52. Because within that 52 weeks, there will be some holiday weeks where there's no pay. There might have been a week or two sickness. There may have been some unpaid leave, jewelry service, you name it. It will have affected those 52 weeks. And so what you end up doing is looking back more than 52 weeks. So typically, if someone's taken 6 weeks off on annual leave, then you're no longer looking at 52, you're looking at 58 weeks. And they've had a couple of weeks sickness, you're looking at 60 weeks. You know, the various reasons why it might have fluctuated are many and varied. The important thing is, you know, 52 weeks is about, we're all used to looking at 12 weeks. You know, prior to this, 12 weeks was what you would consider a reference period. Now you're saying, and those 12 weeks, depending how you did it, you might have looked back a bit further, because ACAS made reference to a normal week's pay, and there was no definitive answer to what was a normal week's pay. So you might deem, as we often did, you know, a normal week's pay, if the employee was on holiday, that wasn't a normal week's pay, that was an artificial average of an average type week, so we might have excluded it. Now, you know, the choice is taken out, but you're looking back a large number of weeks. Let's leave it at that. The one ray of sunshine within the legislation is that the most you'll ever have to look back is 104 weeks. So, you know, you don't have to look back 6 years for someone who's been with you 6 years, which is a positive bonus. But you do have to look back 104 weeks if you can't get 52 clean weeks within that 104 week time frame. You've got to keep going back until you get 52 clean weeks where an employee's been paid for work they've carried out. So that's a difficult task. You know, you've additionally, you know, we've got examples where employers have 2P transferred employees, and we're looking at pay data for 2 companies, because we have to take the weeks that they earned in their 2P employment into account when calculating the average. So and payroll software is great, but it was never particularly good when it came to 12 weeks. When it comes to 52 weeks and some of the subjective things that you need to look at, then all I'm really saying is it's not as straightforward and simple as we might like it to be. Week runs from Sunday to Saturday, unless a worker's pay is calculated differently. So that's for a weekly paid employee. So if as I say, you can be paid, we've got clients who pay from Tuesday to Monday, Monday to Sunday, so they can all continue to use those as their weekly references. But if you're monthly, you don't have that choice. It is based on Sunday to Saturday. So as I say, we're going to discount any weeks in which £0 were earned. 104 week maximum. If less than 52 weeks are available, based on the 4 weeks that are available. So if someone has joined you fairly recently, doesn't have that history, then you're going to base it on a lesser number of weeks. And there's a very vague statement somewhere within the legislation which is along the lines of if you haven't got enough weeks to make a reasonable calculation, then you need to use your judgment. If I was to praise it, that's what I'd say. So, you know, in some cases, you know, someone's joined you on the Monday and been furloughed on Wednesday, or they've gone into lockdown on Wednesday. What is a reasonable determination of their pay for holiday purposes? You know, there's lots of judgment calls in relation to furlough, and here is another one. You need to, you know, and the legislation allows for that. It basically says, you know, it can't be right all the time. If it, you know, if it doesn't look right, you need to do something that is fair and consistent to make it valid. So here's an example of this. So this is the type of pay information that we, in the ideal world, we'd be looking at. So, you know, we're going to look at 52 weeks. This employee has earned a wage in every one of those 52 weeks. We haven't got to worry about anything being discounted for any reason. So in their case, establishing a weekly value would be a very straightforward I say very straightforward in relative terms. I don't think anything is straightforward, but in relative terms, as calculations go, it would be pretty straightforward. Take all the total pays, add them up, divide them by 52. There you have a weekly figure. And then when your employee takes some holiday off, if they take a day off, it will be, you know, 1/5 of that or whatever. So that's a relatively straightforward situation. Variation on a theme. I put these in really. They're unexplained. They're really to demonstrate the fact that, because the examples as we go further on, we've taken a snapshot of a number of weeks really to you know, to try and rule out all of these columns and pay. But if we're doing it properly, we're referencing these periods of time. And of course, you know, when we hit week 1, we're dropping off week 1. So it's not like you can calculate it 1 week and use it the following week, because it will change. You know, an average is such that, you know, if I knock off week 1 at 400 and I had a 500 at the beginning, then my average has changed and everything changes along with that. So, yeah, you can't sit back and calculate it at this point in time and say, that's it, job done. So it's worse than furlough in that respect. At least with furlough, you only had to do it once a month, or yeah, I guess once a week if you're looking at weekly. But so in that respect, it's even more onerous. There's an example where, you know, we're having to bear in mind some additional factors. So someone is off. They've been paid SSP in week 13. The important thing is that they haven't earned anything for anything else. So they've got their £98 SSP, but they haven't got any pay for hours worked. So you would need to exclude that from your calculation. And this is where kind of software can fall down, even with 12-week averages. You know, unless you're setting up every pay element with regard to holiday day 1 in order to exclude it. Again, it's a bit like furlough. If you'd have known then what you know now, you would have marked each pay component to be included in furlough calcs or to be excluded. But of course, none of us knew that. But it's a similar thing here, really. It's knowing what to exclude. And if that 98 5 days of SSP had been split between week 13 and 14, so they'd had 5 days SSP, but it had straddled 2 weeks, then you'd be knocking out potentially, you wouldn't be knocking out that week, because you might well have a payment for both those weeks, albeit at a lower level, because they were only in for 2 days or 3 days, depending which week. So that's why you start then need to look at what happened in each week, because it's not sufficient anymore to know that someone had some SSP that month, because you would need to know whether it straddled 1 week or 2. in order to determine whether you should exclude 1 or 2 weeks from the calculation, and so on and so forth. So it gets very tricky very quickly. Weeks 35 and 36 in this example, holiday pay. So in this case, that's relevant as to the type of worker. If there's holiday pay in there, we've not got any marked, but if they'd have had £600 holiday in both those weeks, if they were a 0 hours worker, we'd be wrapping it up into the calculation and including those weeks. If, however, they're they have regular hours, then you don't include holiday pay anymore. You would exclude those weeks. So it's about knowing what you include and what you don't include, and life, as I say, it gets quite complicated quite quickly. But it's important that you just kind of understand the framework. This framework applies monthly or weekly, fortnightly, 4 weekly. It's the framework that lays over the top. This is the detail that you would need for any pay period if you're going to carry out those holiday calculations in the prescribed manner. We've done that for 0 hours Zelda, or 0 hour Zelda. Zelda's a salesperson, so she's, I think she's a 0 hours contract type person, isn't she? She's got no fixed hours. She works when she works and she doesn't work when she doesn't. She gets some commission and weekend premium though, so it's not just a straightforward £9 an hour. But we've worked through the calculations for 0 hour Zelda. I've done 2 scenarios, one where she's worked every week and one where she's worked most weeks. But during the course of the week, she's carried out the same work. So scenario 1, Zelda's total hours for the period is 440. Zelda's total pay for the period is 6120, and for reference purposes, Zelda's average hourly rate is £13.90. She's going to take a week off. Now, the week off, we're basing it on an average weekly pay. What's her average weekly pay? And her average weekly pay for that time frame. And again, we're making the assumption that she's been with us those 20 weeks. We could equally well have done it over 52 weeks, but we foreshortened it really just to fit it on the page and make the calculations a bit simple. You could check the workings if you wanted to, export it to a spreadsheet, make sure it all adds up. I'm sure it does. So in her case, to establish her weekly pay, she's entitled to 1 week of paid holiday, and her average weekly pay is going to be the total pay that she earned. We're just going to have a quick scan across the top and make sure there's nothing that we feel should be excluded from the calculation. I mean, I think those things are rare. You're not going to find too many of them. But she's got an hourly rate, well, that's clearly going to be included in a holiday calculation. Commission is, no doubt about that one anymore. And a weekend premium, I don't think there's any doubt about that either. So we're going to include everything she's paid. So she was paid 6,120 for the 20 weeks that she was working. That gives her an average weekly pay of £306, and that is what we would expect to see her be paid for a week's holiday, £306. Then I've taken it on to another example where our friend Zelda is done exactly the same number of hours and earned exactly the same amount of money. The only difference is that she's managed to do it within 18 weeks. So for the purposes of calculating a average weekly pay, and on this occasion, we're going to exclude week 5 because there's no payment for hours that have been worked. And we're going to exclude week 18 for, again, because there's no payment for hours that have been worked. So on this occasion, we're running the calculation, and instead of her total earnings being divided by 18 weeks, by 20 weeks, we're going to divide them by 18. So we then come out with her holiday rate as being £340 per week. So we got £306, 340, same hours, same person, same earnings, just the pattern of earnings has led to a different calculation and therefore a different holiday payment for the same week's holiday. And it's really just to demonstrate the fact that it does make a difference how these hours are earned. It can be significantly affected, and you come out with different answers. I mean, she could equally well have, if she'd have been working every other week doing the same, So the first 2 weeks you did 55 hours, but didn't do it in week 2. So the work pattern is going to influence significantly what she gets paid for a week holiday. And again, the difficulty with Zelda is what's the start point, where we again have the problem of establishing. We say she's got a week's holiday. How do we know that? We know she's got a week. We know she's got 5 weeks, 5.6 weeks, but what does that equate to? How many hours, how are we going to get a start point? She could continue taking these weeks forever unless we've got a point in time that we say, we know that you're entitled to 5.6 weeks. So it is, it's one of those difficult ones. 0 hours leads to difficult questions in terms of how you establish that start point. If you've got 40-hour weeks, and they clearly work a week, it's easy. But if she worked every other week, is she entitled to a different figure? The holiday pay is going to be different, but is the entitlement going to be different? And that depends on how you calculate it. If you calculate it 12.07%, you'll come up with a different answer to if you calculated it based on a 12-week average, and that would come up with a different answer to a 52-week average. And there's no right or wrong. There's just fairness and consistency, which is the watchwords of a payroll professional. Fairness and consistency get you through anything. So determining a week's pay is it's just a job of work, really. You can do it, and so you can determine easily enough what for any worker what you're going to pay for a week, because there's no complicated maths there, is there? It's a figure divided by 18 or 20. It's the transparency, it's the view of what's gone on in those in that time frame. It's no good anymore to say she earned £6,120 in 20 weeks. It tells you nothing about where it was earned. She could have earned it all in weeks 1 to 10, and she'd be entitled to a significantly greater week's holiday pay then, but you wouldn't see it unless you look, get under the surface and start to drill down into it. I think that's what it's all about, is drilling down, and drilling down is time, effort. It's a thing that's difficult to do. You've got to record it, you've got to be able to manage the data. It comes with so many challenges, which I think is why if you come up with a similar answer based on 12.07% or something like it, are you reasonable to continue using a method to determine their entitlement? At the end, I'm pleased to announce, to summarize, all workers accrue holiday pay. So no one is exempt, regardless of the fact that they may have come and gone very quickly. Everyone accrues it. They might have left under a cloud and you felt that it was appropriate not to pay it. Hey, not to say that it's right or wrong, I'm just saying they're entitled to it. So yeah, that's the way it is. Holiday year dates in your contract, along with any other salient information. Be clear about starters and leavers holiday accrual and entitlement. So how do we calculate a starter's entitlement? How do we calculate a leaver's entitlement? Holiday calculations for fixed, compressed, shift and 0-hour employees differ. Again, focusing on those 0 hours and irregular hours. How are you going to do it? What is a fair and consistent and appropriate way to calculate that entitlement that you're working with? It's something I'm sure it will develop over time when people have started to focus back in on holiday pay. Other things probably have got in the way. So, this legislation is, what are we in, month 8 since it came into being. We're here talking about it for the first time. Most people are sort of doing the same because other things have simply got in the way. And one would hope that legislation will develop over time to fill in some of the gaps that I think are there for all to see. Holiday pay includes all pay elements that form an employee's normal working week. So So you're basically including everything paid in weeks, and the weeks you include are the weeks in which work has been carried out. Doesn't matter if it's only a little bit of work, £10, £1,000. If they earned it for work, then it's included. If there's no work carried out in that week, you don't need to consider that week. You would exclude it from the calculations. Everything's calculated in weeks. Yeah, made that abundantly clear. Not practical, not easy. Might question the logic of it, but that is the way it is. Monthly paid staff will need their entitlement and pay calculated in weeks to match the legislation. And I reckon, unless there's another poll.
Thank you very much for joining us today. We hope you enjoyed the webinar on holiday entitlement and pay. Should you have any questions or queries and you would like to ask one of the team at Cox & Co Payroll Solutions, then please do email us on inquiries@payrollsolutionsltd.co.uk. And thank you for joining us. Thank you.